All right, all right, all right. Good afternoon, good afternoon, team. I hope you're all having a wonderful Sunday so far. I hope you had a great rest and are ready for a very wild week. And I really mean that this time. We got some major events going on. Um, it's going to be key across the financial markets. Monday, we have nothing going on. There's nothing on Monday. We just have Empire State Manufacturing Survey coming out 1 hour before the market opens. And from there, there's really nothing else going on. However, heading into Wednesday's session, this is where things will happen. That is going to affect the market as well as its pretty much whatever guidance we get from the Fed rate decision is going to greatly affect the market from there. So we have to be ready for this day. This is when we will find out either if the Fed is going to keep rates the same, meaning unchanged, or going to raise rates, which the probabilities are close to, I would say, less than 5%. And then we also have Fed rate cuts, which most are expecting. So over 80% are expecting rate cuts to come in, and we have to figure out, or we're waiting for whether we're going to get a 25 point basis point rate cut, or are we going to get a 50 basis point rate cut. We'll find out on this Wednesday, and that's going to greatly affect the market and even trigger major inflows and outflows from various sectors and various other indexes to other areas that benefits under falling interest rates. So it's very, very important that we do keep an eye out for what the Fed says, as well as their projections heading into the rest of this year and next year and early next year. But yeah, team, this is the main event that we have to look out for heading into this week, and it's taking place on Wednesday. So on Wednesday, we have the FOMC interest rate decision, and that's coming out at 2 p.m. Eastern time, which is 11 a.m. Pacific timing. So for those of us that live in California or anywhere in the West Coast, that's 11 a.m. for us. 11 a.m. on Wednesday, 2 p.m. for our East Coast traders. And then on Thursday, we have the usual initial jobless claims, and that can affect the market. But the most important event for this week is this one right here on Wednesday at 2 p.m. Eastern time and 11 a.m. Western time. All right, now let's take a look at what the charts are telling us so far. We'll start off with the S&P 500. So far, the market in late August and into early September continued to try and break out from this resistance level at 563, and we actually almost broke out. But then out of nowhere, heading into the short trading week, just like the previous times, the market used that opportunity to pull back and get a corrective move in, creating a potential higher low structure. And now we're coming right back up to that level of resistance. We started coming back up to that level of resistance as soon as Monday session. So once we swung back into the full trading week on Monday session, we closed every single one of those days green and up until the very end of Friday. So on Friday session, we ended up closing the S&P 500 price at 562.01, and so far Sunday's open is exactly at that price, 561, maybe around 561, 562, so 561.90 to 562, about the same price where we closed on Friday session. So here are some things to keep in mind, okay, team. The fact that we are back to this level of resistance here, and the fact that we collected all of the liquidity and also made a higher low structure here, this is good for the bulls. And here's why I say that. I know a lot of traders are bearish and they're expecting the markets to fall as soon as the Fed Reserve releases the pretty much cuts rates. but I beg to differ. And the reason why is because I believe that rotation will flow out of the stocks that have been leading the market over the last 2 years and start heading into the laggers that can potentially benefit from the interest rate cuts. So we'll take a look at what are going to benefit from the interest rate cuts. And in the meantime, let's take a look at the S&P 500. We have this potential inverse head and shoulders. The fact that we made that higher low structure, this low right here is higher than that one, which tells us that bulls have a potential trend formation there where they go for a big impulsive wave like this one, and then go down for a corrective wave, and then come back up with another impulsive wave once we break this level of resistance and pretty much head higher towards even up to the 600s there. I'm not saying this can happen in one take. However, for this particular week, I'm going to take advantage of this level of resistance at 563.50. The moment we break above 563.50, I'm going to have a bullish bias, taking advantage of the momentum towards this historic high of 565.16 on the S&P 500. I believe that there's a great chance this time we are going to pierce right through that level of resistance, especially the fact that we absorbed a lot of the liquidity there, a lot of the sell orders, and we came right back up. Now, coming right back up, let's take some things into consideration. We came back. We basically sold off, creating that higher low structure during a time where the bulls were absent in the low volume short trading week. However, coming back into the full trading week, we can see the volume is starting to increase again. The TTM squeeze shows that there is a lot of fuel there. There's a lot of fuel. The flush has been reset. We're above the 20 EMA line. And this time we have been cooling off for a long time at this level of resistance. So the chances of us breaking this level of resistance is going to be extremely high in the next 2 weeks. I believe that as we may possibly even break out before we head into the FOMC rate decision. I think the market, if we don't break out and let's say we end up somehow pulling back, as long as we maintain above the 20 EMA line, above 552, that is my green. Okay, that's my green zone. But anytime we fall below 552, and I want you guys to keep this in mind, write it somewhere if you have to, okay, team? Because that's the only thing that can protect you if the market decides to go the other way around. Keep in mind, if they go below 552, there is no rescuing, okay? Especially if we break below 550 confirmation. If we break below 550 confirmation, there is no coming back. And you need to keep an eye out on that level and make sure that we do not break below that level. As soon as we break below that level of resistance, you want to be cutting your losses. You want to be de-risking a lot of your positions and waiting on the sidelines. This is the right thing to do to adjust with the market, okay, team? Adjust with the market and be the first one out. And to be the first one out, it's 552. Below 552, the market will not be able to rescue itself, and from there the gates of the abbeys are going to open, where we will end up plunging really hard on the Fed interest rate reaction. However, the chances of that, I would say, is slim, because the whole global markets have been preparing for this time for the Fed to cut rates, and I think the market is going to rotate to other sectors of the economy from the way that we are seeing it. So if it looks like a duck and walks like a duck, it's a duck. So we're going to treat it as such. And so far, the market seems to be showing us just that. So keep an eye out for 563.50 breakout heading into this week, especially after Wednesday. If the interest rates is released and we are above 564, I assure you the market will just rally from there. And before you know it, by the end of the day or by tomorrow, we may even be at 570s and whatnot. So the market could really break out this week at this level of resistance, considering that we're above the 20 EMA line as shown on the daily chart. And I would like to show you the weekly chart as well. So I can't it's a must we mentioned the weekly chart. If we take a look at the weekly chart so far, what do we have? We had an impulsive wave there, and the corrective wave had a big bearish breakdown candle there, but we did not break below the 20 EMA line. And instead, what candle did we form, team? It's a bullish engulfing candle, right? We have a large bullish engulfing candle. That's basically, we had this bearish momentum signal, negative MACD there. And this time we have a bullish momentum that is countering that move. And we're above that level of pretty much any sell-off that we got last week. So what do you think, team? What are your thoughts? I would like to see your thoughts in the comments there. What do you think so far? Do we get a large green candle towards the 570s by the end of this week, confirming this reversal candle there? I'm bullish for this week. I think we will get a breakout. That's right, team. I feel the same. I feel the same. Now, do keep in mind, what is the level? What is the bearish level that we need to look out for if it goes the other way around? If it, there we go, Green. Thank you so much, Green. Thank you for mentioning that. Thank you, Miss Ann. Thank you for mentioning that. That is the level we want to watch out for if the market goes the other way. Do not underestimate that level, okay? Be bullish and be comfortably bullish. However, the moment they break below that level there, you want to be out of your positions and pretty much waiting on the sidelines to see what's going to happen, because we don't know what's going to happen below that. We may go on an all-out purge and absolutely fully engulf that bearish engulfing candle and sell off all the way down to 530s and go down much lower, triggering that double top formation below 511 and much lower from there. So we never know what's going to happen, but we can be certain so far that the setup is looking amazing on the upside, and we have all of the qualifications for it. Okay, team? Everything is pointing to some beautiful upside. And now let's take a look at some other sectors, such as QQQ, which represents Nasdaq's mostly tech stocks. And let's take a look at what happened on this beautiful setup there. So what do we have so far? QQQ, which is Nasdaq, has been inside of this bullish channel, going from pretty much from impulsive wave to corrective wave, impulsive wave to another corrective wave, and then impulsive wave. And so far, we have been on that uptrending structure inside of this bullish channel. Then we came back down. We retested that level of support there. This cluster of demand that we broke out from turned it into support. And so far, we are looking like we could be setting up inside of a potential symmetrical formation that could be preparing to push higher. What do we have on the weekly chart so far, team? We have, you can see bears tried to come in and we had a failed breakdown. This bearish engulfing candle below the 20 EMA line was supposed to get a follow through and take us all the way down and fire this big double top all the way down to 355 on QQQ. However, that did not happen. Bulls stepped in with a massive bullish engulfing candle, fully engulfing and absorbing the prior week red. And we closed the candle strongly above that, fully green. So that's very bullish. And we're going to find out this week if we are going to end this counter trend potential. Okay, so this potential counter trend move, are we going to end this downtrend, this level of resistance line, and head back up towards the upper resistance line of the bullish channel? This is what we are going to find out this week, and I think the chances of that happening is quite high. However, we do need to wait for confirmation. So on the S&P 500, that's the level of confirmation that I'm looking for. And on QQQ, this is the level that I'm looking for. As long as we maintain above 473, on QQQ, that's a bullish signal that they are going to break out and head towards this level of resistance next at 484, and then fill this gap here left over from all-time highs at 496. If we notice, SPY already came back and is very, very close to filling its gap. The historic all-time highs gap on the S&P 500 is trading at 564.80. And currently we're trading at 562, which is just $2 under it. However, with QQQ, we're trading at 475, and the gap is all the way at 496. So it's about $21 away from the current levels that we are trading at. So the opportunities can be great. And let's take a look at what were some of the stocks that led this particular sector. Take a look at Nvidia. Nvidia was one of those stocks. Nvidia went from pretty much consolidating inside of this symmetrical formation. It went from pretty much 104 all the way up to 120 in just a week. So in just 4 days. Another stock that led this beautiful, beautiful rally in the last week was Microsoft. And we did say many times in the chat room, in our Discord, and even mentioned in the market analysis that the market lacks leaders and that we needed particularly Microsoft and Nvidia to step in based on our analysis of the SPDR sector. So within the 11 sectors of the economy, we said that Microsoft and Nvidia need to step up and make up for the rest of the market. And what happened? We saw just that. We saw Microsoft coming in with massive, massive buyers, as we can see over the last 5 days, nothing but buying operation. And we have broken that level of resistance, and we're looking very healthy on that double bottom to push towards 445. So let's say Microsoft does continue to gain momentum, especially now that what was that stock that did really well just recently that got some news? Oracle. So seeing that Oracle is getting such a positive reaction, Microsoft's business function is very similar off of that cloud, and they could do the same. So they could get that gap fill here off of that momentum towards 445, and that would greatly increase where the QQQ is currently standing at. So this is what I would be watching. If the market does continue to show strength, I'll be watching QQQ for bulls to really step in, get above 485, and then fill the gap at 496 there, and try to make its way towards that all-time highs there. If we take a look at the weekly time frame, let's see. The weekly time frame, we can see we did sell off. However, bulls came in, engulfed that weekly candle. We're back above the 20 EMA, and we're looking to advance. Let's check the monthly time frame. Monthly time frame just looks like it has been consolidating so far, and we could get a massive, massive demand candle back up anytime in the next couple of months there. Heading into the rest of this year, we could get a nice expansion. Now, for QQQ, I'm really taking it very easy. I'm not going to be buying aggressively on QQQ, but there are some particular stocks that I am watching that are doing really well and that could continue to see more upside. So I do want to talk about another IWM, another ETF, another portfolio. Now, this portfolio represents, again, QQQ represents the Nasdaq stocks. Now, this one right here represents the 2000 small cap Russell 2000 stocks. Okay, team? This one right here represents the small caps. And so far, if we pay attention, it looks like a potential rounding bottom. It could even be a cup and handle there. So this could be the handle. And so far, it looks like we may be breaking out. So if this does, let's say, and I really do believe that, team. I think, hear me out. We have this beautiful consolidation there. We've had this tightening. The 200 SMA line went from a downtrending, flattening phase to now uptrending. And now what bulls essentially need to do to get that uptrend momentum going is they need to break out above this downtrend and trigger that big impulsive wave to the upside, this imbalance move. And the only way this can happen is through the FOMC rate cut decision. So the reason why I say that is because IWM and other small caps do not perform well, or do not perform pretty much good at all during the high interest rate policy. Okay, team. And that is a known fact. We can go back to the 1970s where small caps got clobbered, and the very same thing happened to small caps this year as well, especially over the last 2 years during this aggressive rate in increase in rates. We can see the S&P 500 performed very well and has been in an uptrending market, opposed to IWM that hasn't been in that uptrending market that SPY has been in. So what can make this basically start an uptrend? Well, the rate cuts are going to greatly help, and I know a lot of traders will will say, "Oh, it's priced in." How could something be priced in if we have not yet reacted to it, right, team? We have to see a reaction first in order to say, "Oh, this is priced in or not." So, in my opinion, I don't think anything is priced in yet. So, the moment the Fed does cut rates, the economy itself, this is how great the business has gotten. They just rotate very well. They adapt very well with the monetary policy, depending on what the Fed is doing. So in this case, rotation will be greatly flowing into small caps, in my opinion. And the more that I look at a lot of the stocks, small mid cap stocks, this is what I'm seeing. So we'll take a look at some of those stocks that are showing that potential. And I have been noticing, like if we go to the Russell 2000 there, let's go to public and find the Russell 2000. Russell 2000, and we can see, team, a lot of stocks are really starting to show great increases. And I think once the Fed rate comes in, this is when stocks are going to see those crazy parabolic moves on the, for example, we can take a look at some of these stocks here, team. These are all small caps, part of the Russell 2000, that are seeing great rotation already heading into the rate decision. We can see BTAI. This one moved up 23% out of nowhere. This one moved up 23% out of nowhere. This one is called Sleep Number Corp. ATRA, this one moved up 20% out of nowhere. And we can see a lot of these stocks are at the bottom of the abbeys. They're very beat up. And this one right here, Danimir, I'm not sure what stock this is, Scientific. This one also, a lot of times when I see stocks making these abrupt moves, I like to read them and see what kind of stocks they are, so I can keep an eye out on that specific industry or sector. But the company products are used in various applications, including additives, coating, fibers, filaments, films, thermoforming, and injection molded articles. That's interesting. But yeah, team, we can see a lot of these small caps are getting these crazy moves, and they're still very oversold. A lot of these stocks are still greatly oversold, and finding these gems can really be it can be great. So we're going to keep an eye out on a lot of these stocks here. We're going to watch them, and we're going to trade them. But just wanted to show you real quick just how crazy some of these stocks are rising. 10%. This is a list. SPC as well. Even SPCE, which is Virgin Galactic, this one rose 11%. WKHS, do you guys remember this stock? I bet you haven't heard this one in a long time. WKHS, we used to hear it all the time back in the 2020, 2021 days. And yeah, ever since the increasing interest rates, these kind of stocks just died down. And I think a lot of these stocks, especially the solid ones that survived the cycle, are going to make names for themselves and pretty much see that growth. So keep an eye out on that. We will be watching. Let's take a look at some other Russell 2000s as well. Let's go to the Russell. So S&P, let's take a look at S&P mid cap. What about the S&P 400? So if we take a look at S&P 400, these stocks also, a lot of these stocks are starting to beat earnings, and they're very, very oversold. So this is where I think rotation can flow into. For example, WSM, a lot of these stocks can get that potential rotation. Taylor Morrison, this one's looking like it could get some breakout there. NXT, this one looks like it could get some rotation. Under Armour looks like it could get some rotation within the retail and wholesale. A lot of these stocks are getting these kind of KB Home looks like it could get some rotation. So this stock right here, Synaptics, a lot of these stocks are looking like they can start reversing back up from here, and some are really picking up in momentum. So keep an eye out on these particular stocks that can see some nice upside. How might quad witching impact things? I'm not honestly sure, Vashta. I'm not sure. I know that's on Friday, but I'm not sure how that's going to really affect the market. Based on my understanding, I don't really see it. I don't see it making big impacts in the market. If anything, it has been making the market very, very choppy. And yeah, it could make the Friday very choppy, but overall, I think the market is poised to see some upside. Um, just have that stop loss that we mentioned at 552. And aside from that, I'm strongly bullish in the overall market. I think we're poised to push higher from here. HUM, HUM. Ivan said HUM looks like a good stock for a recovery. Let's take a look. Yeah, it does look good. It does look good. I see they didn't beat earnings. I've been buying stocks that beat earnings, and you can find a lot of stocks that do beat earnings and that are in these levels, and that will see significant upside. Definitely keep an eye out on some of these good stocks that may do well. NKE, let's see. Not sure about NKE also. It may be a good one. AFRM. AFRM, wow, this one's looking good. This one beat earnings, and anyone that did buy the dip on earnings is doing really well, probably very happy. But yeah, this stock saw a nice breakout and could see more upside from here. All right, team, let's go over some of the stocks. So far, are there any questions about our analysis? Oh, and I do want to mention, team, so we can buy IWM, we can buy IWM calls long, and we have to do it before the FOMC rate decision, okay, team? What we can do is the sector that could benefit the most, the portfolio within the indexes of the market that could benefit benefit the most will be IWM. And let's take a look at some IWM contracts that we could buy. If you have a large account, you can buy the IWM January 17, 230 call. It's currently trading at 6.50. It'll be trading at 6.50 on Monday session. And this one can be a great one. It has a lot of time, and I think it can do really, really well. It can be a good investment for the future, especially the reason why I like that target for the 230 is because the all-time highs on IWM is 244. And the main resistance level is 233. So the fact that we are targeting 230, I think that's a good one. I think this will be in par with that move, and it's going to be one of those contracts that'll continue to gain to pretty much gain premiums. So you can also look at other contracts as well. You can buy shorter term expirations. You can look at the November 15 and perhaps pick up the 230 call as well. This one is quite expensive. Yeah, the reason why they're expensive is because on Friday session, these contracts gain 60%. But any opportunity where they lose value this week, this is going to be a great opportunity to buy. So IWM, it's going to be a great one. Whether you're going to buy short-term calls or whether you're going to buy long-term, I think it's going to be great. It's going to be a great area to be in because that's where rotation can flow into. I think this could rocket higher, fill the gap at, we have a gap at 220, and pretty much push higher from there. The 200 SMA line has been sloping higher, and we have consolidated really well. And I think bulls are ready for that expansion there. So the same way we expanded here, as we can see, we consolidated for some time. The 20 EMA was expanding up. The 200 SMA was sloping up, and then eventually we got that large expansion come in. So are we going to see something like that within the next upcoming months on IWM? We'll find out. But yeah, team, I just wanted to share that I am bullish on SPY. I'm bullish on IWM. And let's take a look at the Dow Jones Industrials, the last one for the day. DIA, this one's also doing incredible, as we can see on the weekly chart. They are just about to make new historic all-time highs at 414. And yeah, team, it looks good. The industrials are looking like they can get another expansion from here towards the 430s, which would be around, I believe, 43,000 on the Dow Jones Industrials futures. So if we look at YM, which is the Dow Jones average, the Dow Jones futures, it looks like we can get another expansion here. So yeah, team, I'm definitely bullish. Sujatha, on real estate stocks, I'm not sure how to feel here, because XLRE, as we can see from the real estate sector, this one has been grinding higher for a crazy amount of time now, and we're reaching a level of resistance around 45.51 to 45.94. So I'm not sure if it will cool off there first, but yeah, the real estate market, ever since it broke that downtrend earlier, pretty much at the last month of December. At the last month of December, we broke out from that downtrend on real estate and the real estate sector. And so far, we have been rising higher. So I'm not sure if we should be entering at these levels, maybe to take a quick advantage of momentum. But otherwise, I would really watch other opportunities in the market where rotation can flow into. What is the critical stop level on IWM to be mindful of? Let's take a look. That's a great question. The level that we need to look out for will be the 50% retracement. So below 210, we do not want to be part of IWM under no circumstances. Below 212.01, we do not want to be in IWM anymore. That's where we want to trigger our stop loss to hit, and pretty much wait on the sidelines. The reason why is because they're not going to drop that low. And if they do drop that low, this is usually the topping process. So the chances are very low that we will hit, but at the same time, we always want to be mindful of and have that stop loss in motion. 212, where we want to be very wary and really, really on our knees to see what we need to do. Like, oh my God, do we need to adjust this right here? Do we need to adjust? What do we do? And then once we go below 210, there is no hoping. There's no thinking it. That's the final non-negotiable answer or non-negotiable price that you must cut before we see further downside from there. Could you please recommend some stocks to take advantage of the rotation? What levels to enter, and what are the expected price targets? I did share some today in the live in the weekly watch list that I think are going to continue to see more upside. So a lot of retail stocks, 3 stocks on the tech side that I think will continue to see more upside. First, I think we got Meta. Second, we got Microsoft. And third, we got Amazon. I think those are going to see some beautiful upside from here. And now let's move on to some other stocks that I have for my 2K cash account team that can purchase some of these contracts. So I have them saved up for you here. LQK. So LKQ. Sorry, LKQ. LKQ is at the bottom here, and it's made a nice bullish hammer reversal. and it's looking like we could get some nice upside from here. So I'm watching LKQ, and the way that I want to trade this contract is by buying the February 21st 42.50 call at 2.0 as a swing trade. So 42.50 strike is just right here, giving us until February, all this time, to get more upside above that and gain some premium value from this. So yeah, team, for this particular contract, LQK, this is one that I am watching for February 21st, 2025, 42.50 call. This is a good contract for this trade. So let me just go ahead and type it, LKQ 0221 2025 42.50 call at 2.0. That'll be a great price as a swing trade. Now let's take a look at more. So far, this is good. I'll be watching. If the market gets a positive reaction, I'm going to enter some of these trades here. Why is another one? So this particular stock was inside of a consolidation, and so far it's breaking out of that consolidation, getting above the melt-up operation, and looking like we're going to get a nice expansion from this towards this gap fill here at 35. So to trade this particular stock, I'm looking at January 17, 2025 call, 2025 32 call at 2.0. So if you notice, the 32 call is right here, and it's already in the money. It's in the money by 45 cents, which means the premium on this contract is not all going to go to zero, even if the stock does nothing until the expiration date. So, so far, this is a good bet that we want to take, and I'll be sending out these trades for my 2K Cash account team. So you can go ahead and you can write it down as well to buy it for your account as well, in case I do forget. But so far, these are some of the trades on the smaller end that I am looking at for the smaller accounts. AMAT is another one. Applied Materials, this one is forming this potential double bottom here, and looks like it has a lot of room to the upside once that rate cut comes in. So my target for this particular stock, my first target is at 213, which is just where these gap fills are. There's another gap fill here too, and then we have another gap at 223. So the chances for this, I think for this stock going up is high, and that's why I have it on my watch list to alert for the team. And the contract that I'll be buying will be January 17, 2025, 230 call at 5.50. This is a bit of an expensive contract, but that'll be for the swing trade alerts. As you guys can see, as the team can tell, I have been increasing the number of alerts that I've been sending out. I sent out a Velo alert. There's a lot of questions. There are a lot of questions next to it, question marks, because I I sent out XOM instead of Velo. But yeah, if you got XOM, same thing. If you're, let's say, a little bit of profits on Monday, you can cut it and just get into Velo, or you can remain in that one. That's fine as well. But both of those stocks, in my opinion, are good. And I also bought LVS. So you can also pick it up on your own on Monday session. You can pick up LVS January 17, 2025, 42 call at 2.43. I picked this up, and so far it's trading at the same amount of premiums. And I do want to show you, let's see, there was another Caesars something. So how do I spell the stock? How do I find it? There's another stock called Caesars Entertainment. And that stock, yeah, basically Caesars Entertainment is another stock that's similar to the one that we just looked at, to LVS. Didn't mean to type there, LVS, and it's a good one. So I personally like this one, LVS, and it looks really good. It has a lot of room to the upside, and the contract gives us plenty of time. So keep your eyes out on this contract, and do buy if you like it. Do buy it as a swing trade if you like it. I also picked up Meta. December 20, 600 call at 15.20. Only buy this if you have a large account of at least 50,000. The size will be relative to the account, so this way you won't panic. Stop loss will be at 10.0. So yeah, we're losing about 50% to what we could gain anywhere between 150 to 300 to 400%. We'll see. But so far, I really like the meta setup, and that's something that I am watching. What else? What else did we send out? I'm also in this trade as well. I am in this trade for AES. So on the 2K cash account team, the only trade that I am holding at the moment is the AES January 17, 18 call. That's ever since I started documenting them on my account. There are some trades. I believe there's one more trade, CRM, and that's about it. There's not really much else that we are holding, but AES is one if you want to buy it on Monday session. We're currently up, I believe, 5%. So, yeah, you can pick this up. AES January 17, 18 call at 1.90 on Monday session. And yeah, swing trade that with us if you would like. Now, in regards to L and Lulu Renu, we'll take a look at those as well. And I think those two can get great rotation as we get a Fed rate cut. So please do pay attention to Lulu, Ulta, L. All of these stocks are going to greatly benefit on the rate cut, in my opinion. Oh, WDC, that's a great one, Mariapan. I also got WDC on my watch list as well. We're going to take a look at that. That's a beautiful setup. Manny said AMAT looks weak on the weekly chart. Can you expand on that? I agree. It does look weak on the weekly chart, Manny. Let's pull up AMAT. However, what I am anticipating on this stock is that we are going to benefit. So if we can see this stock has been on a downtrend for a while, I'm anticipating that we are going to see a rotation flowing into AMAT on the Fed rate cut. So if the Fed rate cut, let's say, is in place and the market does like it, and by the way, I do want to mention that if the Fed does a 50-point basis cut, I think this will scare the market off. And the reason why is because everyone in the market or investors will say, why is the Fed cutting rates this much? They're going to be a bit nervous, and they're going to say maybe the Fed is pivoting. That's not good. The Fed is panicking or something. We want to see a 25 basis point. I think that'll be a 25 basis point rate cut. That's going to be I think that's going to be something that investors will like. But yeah, I agree with you, Manny. The weekly chart does not look good on AMAT. I mean, it does look all right. It doesn't look too bad, but it's not at the very highs either. So I believe it is a good discount. It could be something like that last time where we got a big bearish breakdown and they just absorbed it right off. The market conditions were different. We were above the 20 EMA. This time we are below the 20 EMA. But yeah, if you find it weak, you can stay out. But I think it looks good. In my opinion, I think it is something that can see some increase. And this is also in the manufacturing and services and software of the semiconductors. So this is why it is a stock that I'm looking at. Also, AMD is another one. AMD also looks like it could get some upside, but that stock I'm going to stay away from for now. But yeah, let's take a look at some more team. WDC. WDC looks very, very lovely. I just want to mention that team. This stock, I would say, is probably a very, very, very high probability setup. And I think you guys should pick up the swing trade. We're about to break out of this consolidation here. And this could really see a beautiful breakout. So keep your eyes out on this one. It does have a positive MF, which is supportive. What is MF, Manny? Money flow? Oh, okay, I see. But yeah, team, so far WDC is looking lovely here. We have this rally base, and it looks like we're going to get a massive rally follow through towards 66 and then 72. My main target on this one is 72. And the contract that I was looking at, I'm not sure if I did send out the alerts. the alert for the team. Or give me one moment, please, team. There was a contract that I was watching for WDC. This is Amazon. Um, let's go to the weekly watch list. WDC. By the way, team, check this out. This one worked out beautifully. If you traded Velo, that worked out magnificently. So I really encourage you all to start studying. Just take a look at this beautiful setup, team. This is where we called it out right here, and that's where we caught the move. You see that? That's V right there. That's V, team. How beautiful is that? And we called that out too. But yeah, let's see if I can find WDC. I can't find it at the moment, team, but it is something that I'm trying. The reason why I'm looking for it is because it is a stock. It is a stock that I was tracking one of the contracts for, and I would like to. Oh, there it is. So WDC, we got WDC February 21st, 75 call. So let's take a look at WDC. And please write that down, team. Make sure you save it somewhere, because this can be an amazing opportunity where you can benefit from heading into the following weeks. So these are some high quality swing trades that I will be taking myself. So February 21st, 75 call. It's currently trading at 3.60. Yeah, so we could pick that one up, team. I think that's a good call there. We can pick up that call at 3.60, 3.50 on Monday session. So again, the contract is buy to open WDC February 21st, 2025, 75 call. We are targeting that strike right there. And it could happen into November for all we know, but definitely keep an eye out on this beautiful setup. WDC, Western Digital Corp. I think this is going to be an amazing trade. Keep your eyes out on this trade, team. Don't forget it. Before we cover some of our team stocks, let's cover the. Oh yeah, that's about it. I had WDC for the team. Oh, and I also had for my 2K cash account team. For those of you that are part of the 2K cash account, we're going to buy WDC January 17, 2025, 75 call at 2.60. So instead of buying the February, we're going to pick up the January for ourselves. So because it is cheaper, we're going to trade that bull flag breakout. And yeah, that's the trade. That's pretty much the trade reason on WDC. We'll be buying that trade. But yeah, so far, team, that's about it. That's all the stocks that are on my watch list. Keep an eye out on Velo as well. I am buying the dip on Velo because I'm expecting that the energy sector, which is really beat up over the last couple of months, is going to get some aggressive upside on the Fed rate cut. So if that happens, I would like to be there and take advantage of the corrective wave back up on the energy sector. Let's cover BA for Jorge. BA, honestly, I'm not really a fan of BA there. BA just keeps going down and down and down. And I would like to see some reaction first. I'd like to see some buyer reaction where they break this downtrend at 171, and then I'm going to be a buyer there, because if they can't really break that downtrend, there's not really much to be done for BA, where we would be fighting the trend there. Any other questions so far, team? Anything that we should be? Oh, YP shared MU, team. MU, I love this setup. I think this stock is going to very likely, I would say, beat earnings on September 25th. And yeah, they're looking really great here. Keep your eyes out on this particular stock. No matter where I draw my trend line, it looks like bulls have the breakout with this candle, and they can see more upside. So keep your eyes out on MU. MU looks amazing. You can buy some long-term contracts. Rain Bond will alert this particular contract, so keep an eye out for her alert. You can even buy the March 21st 120 call. You can pick this up for the long term and pretty much hold on. And I think it'll do well. I think it'll do well in the future. So Micron, March 21st, 2025 at 5.25 right now. That's the contract. Again, MU 120 call expiring in March 21st, 2025. For PLTR, PLTR has been advancing higher and higher. It does look like it has a little bit of room to the upside, but it's been going higher and higher, and it's not one that I would be chasing. It does have room to 37 to even 40, honestly, and it may even go to 45. Who knows? I honestly would not doubt if they take the stock up to 45 for some insane melt up operation reasons, such as this one that we saw the last time. So who knows? We'll see. But PLTR is currently in an uptrend, and I think it'll continue to be in an uptrend from there. Now, if it does get some of the corrective waves, that'll be lovely. So if it does get a corrective wave, I think it will be a good buy. Any freight carrying stocks that we prefer, such as FDX and UPS. Let's take a look. Usually this is Rainbow's expertise, but she's not here today. She trades these kind of stocks. So far, this stock is still in a downtrend. FDX is still in a downtrend. UPS is also still in a downtrend. There could be some bottom feeders, but I would like to see some momentum on them. I would like to see the rate cut bring a positive reaction to these type of stocks so that we can trade them. W, let's take a look at W. W is definitely getting some upside here. It is one of the retail stocks, and retail stocks are really starting to see upside, which is good. And I believe that retail is going to continue to see more upside from here in the upcoming months. So eyes out on Amazon, on Target's another one that we are watching. Watch these kind of stocks into the rate cut decision. I think this is going to benefit. These kind of stocks are going to benefit. Now, I just remembered AB and B. Let's take a look at Airbnb. Airbnb could be a good one, team. Keep your eyes out on Airbnb. I think this could be a time for the stock to start seeing some upside in the upcoming months. Don't buy anything short term. Buy long term expirations. Okay, buy contracts that expire in 1 to 2 years because the stock has dropped a lot. And the question is, if we are going to go up. If we do go up, they're going to recover fully. So if that turns out to be the case, why even take the risk of going short term when we can buy something long term that gives us more opportunity for that breakout to happen so that we can see that full on recovery back up. SMR and NEE. Now, NEE has been going up a lot, so I don't have much of a comment. I think it can go higher since it's in an uptrend, and the market could continue to trend. But yeah, aside from that, not much else to share. Now, SMR does look good. It just broke its downtrend and looks like bulls have a lot of room to get to on the upside. So it could work its way up towards $11.48. By the way, Jorge, Walmart, man, what an absolute beast. Walmart is doing really, really great. I was looking at Walmart and it's doing phenomenal, really, really phenomenal compared to all of the other retail stocks. Even better than Amazon, doing really, really well. But yeah, team, that concludes my session for today. So far, do you have any questions, any concerns, anything that I should cover on my end or answer to the best of my abilities, hopefully? Thank you so much, Jorge, and I'm looking forward to seeing you make profits. If I were to share something, Jorge, I see that you have made some beautiful gains this year and you're doing really well. I say that continue to be on the defensive side and be defensive, okay? Make sure you are defensive and you protect that profit at the very most, okay? You do not risk it just because you've made those nice profits, and just keep on going at it, man. You're going to continue to do well. And just know, okay? Just know the fact that you are growing your account by this much this year, if you maintain it well and you build your risk management, and I hope that you don't have any impulsive thoughts where it's going to make you, or intrusive thoughts where it's going to put that money at risk. Just make sure you maintain that risk, make sure you continue to do a good job, and continue to grow it, because over the years, if you grew it that much this year, then heading into next year, you're going to you're going to, if you double that next year, that's going to give you even more of a multiple folds of profit, and so forth and so on. So just take it easy, maintain risk above all, and maintain the high probability. And just know, when we get very profitable, we get stupid, we start doing stupid things. And try to control yourself, try not to do that, okay? Try not to have one of those days where you're going to lose 30% of your account in one day. Don't ever even try to have that become a possibility, because what happens with traders is, like, they open up, they expand their risk tolerance by so much, where they make that be a normal part of their business, which is their account. Their account is their business, and they make it so volatile where they're losing 50% in a week, they're gaining 50% in a week. That's very dangerous. We don't want to do that. We want to maintain risk management and a consistency approach above that type of style, because that type of style is not healthy for us, and it can bring us a lot of unease outside of the markets as well. So keep on doing an amazing job, being consistent, managing your risk, and really, really becoming a careful and an aware trader. Amazing, amazing job. Same with you, RRB CEO. Keep on doing an amazing job. For others of you that are doing an amazing job, shared with us in the Discord. Keep others motivated and encouraged, and try to get them to also do the same. Try to tell them to be patient, to not break their rules, because a lot of times traders lose because they start messing with their rules. They start adjusting their rules, and that's not good. And we also have to keep in mind, we're not going to be profitable in all market conditions. So it's very important that you do not do a fight or flight with the market, where you risk a large portion of your account within that given week because the market is being difficult. Just remember to zoom out, take your time, and just know that we are not a fan of entering during these times. We're a fan of entering when we get a breakout, when we get those trending markets. Thank you so much with me. Thank you so much for being here. Really, really appreciate your time. I hope this analysis does help you make some amazing trades this week. Remember, team, we are bullish on SPY. I'm going to buy calls above towards and for a breakout above 565. And anywhere below 552, we do not want to be in any trades, okay? We put the white flag up on the bullish trades and wait on the sidelines whenever we break below that. Aside from that, and a CM CSA, so Comcast team CM CSA. This is a stock that I'm also holding, and it could do really, really well after the Fed rate cut. So yeah, I'm still in this stock, and it can continue to do well. Matter of fact, I may even alert that for our 2K cash account team. Thank you so much, Dan. Really appreciate you. And Ivan, I really, really appreciate you, man. Love you too. I hope you do an amazing job this week. I hope you manage your account really well, manage your risk really well heading into the FOMC rate decision week. And just know, team, remember, even if you end up on the wrong side, just take it easy, take a step back. Do not approach it with an emotional, do not approach it emotionally, because it may it may really put you out of business. Okay, you don't want to do that. Just take it one step at a time, and don't do the fight or flight. Understand, please understand, the market has different phases. Okay, one phase is maybe we're in that phase where your style does not do too well, and we don't want to really like force it and make things worse. Okay, just take it easy, take a step back, come back next week, and do multiple times better than that, and you'll just see the markets will get better. For example, heading into this week, the market's just going to overall be over the next upcoming weeks, the market is going to be a much better condition than the prior weeks that we dealt with. So yeah, team, thank you so much for your time, and I hope you have a wonderful rest of the day. Take care. Good night. And see you, sorry, wonderful rest of the night, and see you in the morning. See you in the live trading room tomorrow. I'll be there, and I'm looking forward to it. See you. Take care, team. Good night, everyone.